tax season may seem far away, but it really isn't. So what are some steps that you should take now in order to plan for your 2024 tax return? Well, here to talk with me about that is Lisa Featherngill. She's the National Director of Wealth Planning at Comerica Wealth Management. Lisa, welcome.
Thanks, Bob. Nice to be here.
Pleasure to have you here. I'm curious where to begin. What's the first step that people need to take?
The first step is to really understand where you are from a tax liability perspective. And to do that, it's best to do a tax projection. So just even starting with 2024, looking at all of your income and deductions, calculating the tax that will be due and comparing that to your withholding and any estimated payments that you may have had to see how much is still due.
Yeah. And the requirement there is what? It's the lesser of 90% of your 2024 tax liability or 110% of your 2023 tax bill. Is that how it works?
That's right. If your income's over a certain level, it's 110% of last year's tax bill, or like you said, 90% of the current year, whichever is less.
Yeah. And withholding, if you have underpaid your tax bill, there are a number of ways that you can sort of make up the difference, whether it's by devoting some of your RMD to withholding or other measures that people can take.
That's right. The nice thing about withholding is that it's deemed to have been withheld throughout the year, whereas an estimated payment is deemed to have been paid on the date that it was paid. And if you're trying to minimize the underpayment penalty, and the interest rate has gone way up on that, so you want to minimize that penalty, withholding works better during, especially when we're planning in the fourth quarter. So like you said, you could take an RMD, either from an IRA or a retirement plan, and increase the amount of withholding. If you have a bonus payment coming at the end of the year, you could increase the withholding on that as well.
Yeah. So you wrote the 2024 year-end planning guide before Election Day. Our next topic, I think, is a number of things, but let me turn our attention to some other items that one might need to consider as they look at their tax liability. Capital gains and losses. What do folks need to think about there?
Well, it's important to look at your recent statements and see where you are year to date on losses versus gains, and also consider any capital loss carryover you might have from your tax return last year, because that can offset net gains plus $3,000. But if you're in a net gain situation, you may want to look at losses, potential losses that are in the portfolio, and go ahead and take some of those. Just remember the wash sale rules. If you sell something for a loss, you can't recognize that loss if you buy that security either 30 days before that sale or 30 days after. And if you have a stock purchase plan, it considers those purchases as well, or purchases even within a retirement plan.
Yeah. So the tactic that you're referring to is often called tax loss harvesting. Is that the term of art?
That's right. And then looking at the market today, this is a day for tax gain harvesting. If you're in a net loss position, you may want to actually recognize some gains to offset those losses. And then in effect, when you buy the stock the next time, or you might have a higher basis.
Yeah. So on another topic, most people are taking the standard deduction and can't take advantage of charitable giving. But for those certain people who can take advantage of itemizing their charitable deductions, what do they need to know?
Well, the $10,000 state and local cap is still there, at least for now. If somebody is near the cusp of the standard deduction versus the itemized, the level of itemized, you can play around with multi-year tax planning. So for example, if somebody has itemized deductions, including charitable and not medical, because that's a hard cap. So state and local tax and charitable, and let's say the total of those two is $25,000. What you could do is accelerate some of your 2025 charitable contributions this year and itemize, and then have less charitable contributions next year and take the standard deduction. So in effect, you get to double dip a little bit.
Yeah. And what about with stock donations? Does that apply here too?
Absolutely. And We're sitting here the day after election, the stock market is way up. So thinking about stocks that have appreciated in value and using those for your charitable contributions, it's just a win-win because you can take the deduction, assuming that you've held the stock for a year or more, you can take the deduction at the market value and regardless of the amount of appreciation, not have to recognize that as capital gains.
And then just as a reminder, with respect to the deductions, I think it's what, 29,200 for married couples and 14,600 for individuals and 21,900 for if you're filing head of household. All right, so let's turn our attention. Here we are. It's the day after the election, and everyone I'm talking to today is talking about the Tax Cuts and Jobs Act. And when you first wrote this, you talked about planning ahead for the sunset of the Tax Cuts and Jobs Act. Today, everyone I'm talking to says likely won't happen, might be extended. What are your thoughts?
Well, you know, every time you've talked to me in the last year, I said, you know, it takes an act of Congress for that Tax Cuts and Jobs Act not to sunset. Well, we may have a very willing and presidential administration. We don't know the results of the House yet. But I was on a webinar, listening to a webinar this morning from a political consulting firm. And they said that most likely the Tax Cuts and Jobs Act will come up in legislation early in the year. Most likely it won't sunset, but to be careful because there is enough, there's enough negative sentiment towards the White House that you don't want to bank on it. So I would say probably it won't sunset, but I'm watching it carefully. And we don't know the results of the House, and that could have a significant impact.
Yeah. So from a planning perspective, here we are. It's November. There may be few opportunities for people to sort of lower their tax liability, but there might be opportunities to plan for their 2025 tax return. What are there any moves that people should think about, given that it could go one way or the other?
Yeah. So, you know, I've been thinking a lot about this morning because I've been talking to people about multi-year tax planning and maybe even accelerating income through Roth conversions or other strategies. And so with the possibility that the Tax Cuts and Jobs Act won't sunset, is that still relevant? And I think there are certain situations where it is still relevant. So for example, if somebody's in a 24% tax bracket this year, and they look ahead, and if there was sunset, they would be in a much higher, say a 33% bracket. You know, that's a pretty significant difference. Maybe go ahead and use some more of the 24% bracket this year. Another situation is if you have special tax issues to consider light, you've got a charitable donation carryover that's getting toward the end of the carryover period. You might want to accelerate income in order to take that deduction. Or if you have a capital loss carryover, and if you have a capital loss carryover, and you could basically shelter the from a Roth conversion, it makes sense. You got to run the numbers for sure.
Right. You got to run the numbers, of course. So we've covered a lot of ground. Anything we missed as you think about income tax planning for your 2024 return?
You know, for business owners, there's always more flexibility because you can time deductions a little bit easier than an employee can. Also looking at retirement plans. There are a variety of retirement plans for those that are self-employed. Some enable you to contribute more and deduct more, depending on your situation, depending on your age, your income, how many employees you have. But I would definitely make sure that that's considered.
All right. All right, Lisa, I want to thank you, as always, for sharing your knowledge and wisdom with us. It's so greatly appreciated, and I'm sure it's going to help a great many people. So thank you.
So glad to be here. Thank you.